This video contains an important chapter named Bills Exchange. It contains drawing, honoring, discounting, endorsement, and bills sent for collection. It also contains 9 illustrations and solutions. It is in Chapter 3, named Bills of Exchange, of the textbook, Financial Accounting. This is more suitable for B.Com, B.B.A, M.Com, and M.B.A of all universities of India and foreign countries. It is suggested to study through laptop. Presented by Dr.M.Wilson. Chapter 3. Bills of Exchange. The transactions in business are carried by either on cash or credit basis. When transactions are done on credit basis, the person who paid money in advance or sold goods for credit needs some guarantee for his money. This guarantee may be given by the debtors to the creditors in 3 different ways. They are 1. Check. 2. Bills of exchange, and 3. Promissory notes. 1. Check. Check is normally issued for a debt of very short period. Mostly the date of check will be the same day or next day of the issue of the check. Sometimes, it may be for a future period on the basis of the due date of the debt. 2. Bills of exchange. Section 5 of the Negotiable Instrument Act 1881 defines a bills of exchange as an instrument in writing containing an unconditional order, signed by the maker, directing a certain person to pay a certain sum of money, only to or to the order of a certain person or to the bearer of the instrument. According to the definition, there are 3 parties in the bills of exchange, namely A. Drawer, B. Drawee, and C. Payee. A. Drawer. Drawer is the creditor who draws the bills of exchange to direct his debtor to pay the amount of debt on a date mutually agreed between them. He sends the bills to the debtor, otherwise called acceptor or drawee, for acceptance and receives it after the acceptance. He may either discount the bill in a bank or endorse the bill to his creditor. In this situation, he may also be called an endorser. If the bill is in his possession, he can send the bill to the drawee on the due date and receive the amount for the bill. B. Drawee. Drawee is the debtor. He is otherwise called an acceptor. He accepts the bills of exchange drawn by the drawer. On the due date of the bill, he should pay the amount for the bill to the party from whom he received the bill. He may receive the bill either from the drawer, or endorsee or banker. C. Payee. Payee is the person who actually receives the money on the due date of the bill. The person who possesses the bill on due date is called the payee. Payee may either be the drawer or endorsee or banker. If the bill is in possession of the drawer, he is the payee. If it is endorsed to third party, the endorsee is the payee, and if it is discounted, then the banker is the payee. Requirements for a bills of exchange. 1. The bill should be in writing. 2. It contains an unconditional order. It means, the creditor orders the debtor to pay back certain sum of money in future. 3. The required amount of stamp should be affixed in the bills of exchange. 4. The date of drawing the bill and the period of the bill should be mentioned clearly. 5. The due date of the bill is counted as 3 days after the completion of the period of the bills of exchange. 6. The bill should be duly signed by the drawer and the acceptor. 3. Promissory note. Section 4 of the Indian Negotiable Instrument Act 1881 defines a promissory note as an instrument in writing, not being a bank note or a currency note, containing an unconditional undertaking, signed by the maker, to pay a certain sum of money only to, or to the order of a certain person, or to the bearer of the instrument. According to this definition, following are the characteristics of promissory note. 1. It is an instrument in writing. 2. It contains an unconditional undertaking, given by the debtor to the creditor, promising to pay a certain sum of money, i.e., the debt, in future. 3. It should be duly signed by the debtor. 4. The required amount of stamp should be affixed in the promissory note. 5. The date of the promissory note and the period of promissory note will not be noted with a notary public. Accounting treatments for bills of exchange transactions. The transactions in the bills of exchange are to be recorded in the drawer's book and drawee's book. The transactions can be recorded in the books of journal and ledger. Journal entries for bills of exchange transactions. 1. When the bill is drawn and accepted. The bills of exchange are drawn by creditor and accepted by the debtor. Due to credit purchase or borrowing, the person becomes debtor and has to accept the bills of exchange. The journal entry for drawing and accepting the bills of exchange is as follows. Journal entries for bills of exchange transactions. 1. When the bill is drawn and accepted. The bills of exchange are drawn by creditor and accepted by the debtor. Due to credit purchase or borrowing, the person becomes debtor and has to accept the bills of exchange. The journal entry for drawing and accepting the bills of exchange is as follows. In the book of drawer it's written as bills receivable account debtor to acceptor's account. being the bills received. In the book of Drawi it's written as drawer's account debtor to bills payable account, being the bill accepted. 2. When the bill is honored on the due date, the journal entries are as follows. In the book of drawer it's written as cash account debtor to bills receivable account, being the bills honored. In the book of Drawi it's written as bills payable account debtor to cash account, being the bill honored. 3. Discounting of bills of exchange. Discounting means getting loan from the bank on the security of the bills of exchange. The banker charges a discount for discounting the bill and pays the balance amount of the bill to the drawer. Drawer should give the bill to the banker. On the due date, banker will send the bill to the acceptor and receive the money from him. The drawer has to pay the money to the banker. Journal entry for discounting of bills of exchange is as follows. Book of drawer, bank account debtor, discount account debtor, to bills receivable account, being the bill discounted. No journal entry is passed in the book of Drawi. Illustrated problems. Illustration 1. K draws a bill of exchange is on the 1st of March 2024 for 2,500 rupees which was duly accepted by M. The period of the bill is 3 months. On the due date M honored the bill. Past journal entries in the book of K and M. Solution is presented here. Illustration 2. M sold goods on credit basis to N for 3,000 rupees on the 4th of September 2024. On the same day N accepted the bill of 4 months drawn by M. On the due date N honored the bill. Past necessary journal entries. Solution is presented here. Illustration 3. On the 1st of January 2024, X sold goods worth 3,000 rupees for credit to Y. Since Y could not pay the cash immediately, he accepted a bill of exchange drawn by X. On the due date, honored the bill. The bill is for a period of 3 months. Past necessary journal entries in the book of X and Y. Solution is presented here. Illustration 4. A sold goods to B for 10,000 rupees on the 5th of January 2024. Since B could not pay cash immediately, he accepted a bill of exchange drawn by A. The bill was discounted by A at the rate of 10% per annum. On due date B honored the bill. The bill is for 4 months. Solution is presented here. Illustration 5. X sold goods worth 5,000 rupees to Y on the 1st of March 2024. Since Y could not pay the cash immediately, he accepted a bill of exchange for a period of 3 months, drawn by X on the 2nd of March 2024. X discounted the bills of exchange for a discount at the rate of 10% per annum. On the due date Y honored the bill. Write necessary journal entries in the book of X and Y. Solution is presented here. 4. Endorsement of the bills of exchange. Endorsement means transferring of the bills of exchange by the drawer to another party in order to settle his debt in full or part payment. The person to whom the bill is endorsed is called endorsee. Hence, the drawer may be called an endorser. Book of endorsee. Bills receivable account debtor to drawer's account, being the bill endorsed. No journal entry in the book of Drawi. Illustration 6. On the 10th of December 2024, Y accepted a 3-month bill for 7,400 rupees drawn by X. On the 17th of December X endorsed the bill in the name of Z. On the due date of the bill, Y honored the bill. Past journal entries in the books of X and Y. Solution. Journal entries are presented here. Illustration 7. On the 1st of January 2024 A draws a 4-month bill for 7,000 billion rupees, accepted the bill and gave it to A. On the 3rd of January 2024, A transferred the bill in the name of his creditor, C. On the due date, B honored the bill. Journalize the transactions in the books of A, B and C. Solution. Journal entries are presented here. Illustration 8. On the 5th of January 2025, L accepted a 3-month bill for 9,000 rupees drawn by K. The next day K endorsed the bill to M. On the due date L honored the bill. Journalize the transactions in the books of K, L and M. Solution. Journal entries are presented here. 5. Bills sent for collection. The bill may be sent for collection by the drawer through a banker. The banker will send the bill to the acceptor and receive the money for the bill, and it may be credited in the account of the drawer. The journal entries for the bills sent for collection are as follows. Book of drawer. 1. When the bill is sent for collection. Bills sent for collection account debtor to bills receivable account, being the bill sent for collection. No journal entry in the book of acceptor. 2. When the bill is discharged. In the book of drawer. Bank account debtor to bills sent for collection account, being cash received for the bill. In the book of acceptor. Bills payable account debtor to cash account, being the bill honored. Illustration 9. On the 1st of January 2025 K draws a bill of exchange for 5,000 rupees, which was accepted by M. The period of the bill is 3 months. On the due date, K sent the bill for collection through a banker and Y honored the bill. Write necessary journal entries in the books of K and M. Solution. Journal entries are presented here.